Okay, 10,000. Your 1% risk maximum is $100. If you buy a stock at $50 and set your stop loss at $48, that's a $2 risk per share. You can only buy 50 shares. If the trade fails, you lose exactly $100. This rule gives you a monumental margin of error. You could fail 50 times in a row before losing half your account. It takes the stress out of single trade.
That's a huge difference psychologically. It allows you to focus on the process, not the outcome.
Absolutely, and that leads to the mindset. You have to cultivate discipline and resilience. Accept losses as operating costs, not personal failures. Practice patience. Money is often made by waiting for the perfect opportunity, not by trading constantly. And please avoid relying totally on outside advice. Use the internet guru as an input, but subject it to your own risk analysis.
That's a solid point on authority. You need to understand why you're doing something, not just what someone told you to do. And finally, you touched on macroeconomics. Why is it important for the average retail investor to track things like inflation and interest rates?
Because the market doesn't operate in a vacuum. Inflation is like the tide, constantly eroding your purchasing power. When the Federal Reserve raises interest rates to combat inflation, they make borrowing more expensive. This hits growth companies that rely on cheap debt the hardest. If you're a novice, you might be buying those growth companies right when the Fed is tightening. An expert understands the underlying narrative, anticipating the risk of economic contraction. It's about knowing the story behind the price.
That is such a powerful framework. To quickly recap the core lesson, success in investing is measured by how much money you protect, not how much you earn. We've talked about the importance of a written plan, respecting your stop loss, avoiding revenge trading, and the absolute necessity of the 1 or 2% rule.
And remember, expertise isn't about avoiding storms. It's about having a strong ship, your protected capital, and an accurate compass, your risk plan. By implementing these principles, you move from being a random amateur to a disciplined financial strategist.
Well said. Thank you so much for breaking down these fatal mistakes and giving us a clear roadmap for protection.
My pleasure, Alex. Happy trading, everyone.
And thank you all for tuning in to The Capital Mindset. We'll catch you next time.